This is Andrew Stotz of Stotz Investment Research, looking at global equity FVMR Snapshot. Remember that my FVMR Snapshot looks at fundamentals, valuation, momentum, and risk. Now, since we're looking across the world, I've divided the world into emerging and developed markets. And the first thing that we can see is that the global markets have an ROE of about 13%. About a 40% or so dividend payout ratio, about a 15 to 16 times PE, and about 2 times price to book. The EPS growth expectations for 2017 and 2018, let's say about 12%. Recently, the market has been hit slightly, but over the last 1 year, the global market's up by about 12%. And gearing is, let's say, about a little bit over 50%, though that analysts, over the past 12 months, we can see that's come down. This was from 2015 when we had full data for all companies. And finally, the volatility on a short-term basis was about 5.6% standard deviation versus 9.4% on a yearly basis. So once we understand what's happening in the world, now let's look at emerging versus developed markets. The first thing that we can see is that emerging markets have an ROE of about 12% and developed markets about 13%. So a little bit more ROE in developed markets. Now, if we look at the main developed market, the biggest one, the US is about 15 to 16 times. So that we can see that Japan is very, very cheap at about 8, and that's pulling it down. Now, if we then go and understand what's happening with PE, what we can see is that though the global PE is about, let's say, 16 times in 2017, in developed markets, it's about 17 times versus 12 in the emerging markets. So emerging markets are relatively cheap on a PE basis compared to developed markets. And we can see that the US PE is about 18 times, so pretty darn high. Now, if we look at PE, we also want to look at the EPS. So let's take a look. For 12 times PE, what are you getting? You're getting about 20% EPS growth. And for 18 times PE, you're getting about 11% EPS growth as forecasted by analysts. Again, I'm looking at every company that I can aggregate into a bottom-up aggregate of all companies. And this is weighted, of course, by market cap. Now, we can also see that North America, or let's just say developed markets, the developed markets EPS expectations are about 12%. But here we can see 20% roughly, and then down to 11. So actually, if we look at the emerging versus developed, right now, analysts' expectations are about the same for EPS. Now, we know from my own dissertation research was that analysts were generally optimistic and that EPS actually came in lower. So maybe we're talking about 8% EPS growth over that period of time till 2018. Now, if we look at price, what we can see is not much difference between developed and emerging markets on price. And finally, if we look at volatility, well, volatility at the emerging markets level versus the developed markets level, these two are pretty close. But we do have some markets that are very low volatility, and US tends to be the lowest volatility. That's the volatility over the last 12 months. And we can see some of the higher volatility, well, Japan, which is down so low and is highly volatile. And then in the emerging market space, actually Latin America tends to be a little bit more volatile than others. Now, if we look at the last thing, which is the problem when we look at developed markets, is that North America is huge. So if we were to take developed markets and take these 3 markets and exclude the North America market, so we'd end up with developed non-US. And when we compare emerging markets at about 12% ROE, we see 10% ROE. So developed non-US actually has a lower ROE. When we look at the emerging markets, we can see in PE of about 12 times versus about 15 times here for the non-US. So PE ratios still are relatively expensive. And if we look at overall growth, these developed non-US companies tend to have a little bit higher growth than the total developed market. So we can see that there. That's mainly coming from this massive growth. In fact, this is a big number to consider. 18% growth in Asia, and that's developed Asia, right? And then what we have is Latin America with the highest EPS growth here. So that gives us a little bit of a guide, and we can sum up by saying that the ROE of the emerging markets are slightly lower, and EPS growth expectations are slightly higher. And right now, the PE for the emerging markets is about 12 times, and PE for the developed markets is about 17. So developed markets are a little bit more expensive. That wraps it up for Global Equity FVMR Snapshot. If you want to see your company, your country, just let me know. And if I have it, I'll make it for you.